Good morning. Thanks for joining us today. I know we are talking about the future, but we'll probably look a little bit the past as we set the stage. But before we dive in, love to have each of you introduce yourselves. So we'll start with you, Matt.
Good morning, everybody. My name is Matt Szymanski. I am the Vice President of Mill Operations for Green Bay Packaging. Our company is a third-generation privately held corporation based in Green Bay, Wisconsin. We've got over 35 locations across the country with a little bit of activity in Mexico. The vast majority of our operations are really in Wisconsin, from northeast Wisconsin down to southern Wisconsin. In the state, we employ about 1,950 people out of a total of 4,800 across the entire organization. So you can tell we're very focused here, and that's where we grew up. In my role, I'm responsible for the mill operations and the paper making operations in Green Bay, Wisconsin, in Morrilton, Arkansas. We've got a lumber operation in Arkansas, as well as 255,000 acres of land that we own in the state. So we work with our own land, and we also support another 250,000 acres of private landowner land in Arkansas that helps supply our lumber and paper making operations. Thanks again for having me, Drew.
Thanks, Matt. Patrick.
Morning, everyone. My name is Patrick Flesch, President and CEO of the Gordon Flesch Company. We're headquartered here in Madison, but we stretch all the way from East Ohio to Sioux Falls, South Dakota, pretty much everywhere in between. We have 7 major locations throughout the Midwest. Primarily, we are a technology services provider in the office space. Cornerstone of what we do is in print, so we're a reseller for Canon, Ricoh, and Lexmark products. We also have a pretty significant IT business, and we recently got into the telephony space as well, so doing voice over IP services for our clients. We've got just shy of 700 employees company-wide, somewhere around 200 to 250 here in the state of Wisconsin. And in Wisconsin, we have offices in Madison, Milwaukee, and Appleton. I'm proud to represent third generation of Flesch family leadership. My brother is involved in the business as well. He works out of Columbus, Ohio, and just feel very humbled and honored to have that opportunity.
Thank you, Patrick. And Jim.
Good morning. Jim Might, President of ATI Forged Products. Part of a larger company called ATI that's headquartered out of Dallas. But on the business unit I run, Forged Products, we have around 1,500 employees worldwide. In Wisconsin, we have 3 operating plants, one in Cudahy, Wisconsin, around 720 employees, one in Appleton, around 60 employees, and then one in a small town called Coon Valley outside of La Crosse, around 50 employees. And majority of what we do is taking metal and putting it into a forged shape for the jet engine market. So aerospace and defense is our main market that we serve. Really excited to be here today. Thank you.
Great. Thanks, Jim. Really pleased to have all of you, a great diversity of geographic locations, size, and industry. So excited to hear what you all have to share. As I alluded to, we're here to talk about the future, and we'll get there, but it'd be great to hear a little bit about how 2023 has been. We'll start with you, Matt.
So 2023 is for Green Bay Packaging has been a good year. For our industry, not so much. Coming out of the pandemic, there was a huge surge of demand on the corrugated packaging space. And starting in 2022, we saw that starting to soften as things started to cool down from e-commerce just rolling out of the pandemic. Our industry as a whole is down about 7% year over year to date. Lucky for us, we're flat year over year. So that's a really good outcome for us. There's certain reasons for that. Obviously, quality and service are huge, but for us, we feel like we've maybe already felt a little touch of a recession in our business. But right now, things are flat. I think that the rest of the fourth quarter is going to be a little bit more challenging than the first 3 quarters of the year, and going into early next year. But I won't get quite there yet. But that's where we sit for right now.
Jim, how about you?
If for our business in 2023, it's been very strong. Be a lot better, I think. Majority of what we do again is in the jet engine market, and I think everybody that has been flying lately understands that you can't find a seat on an airline, and passenger miles are up and continue to grow. So it's great news for us. When I said it could be a little stronger, I think it's around supply chain challenges that we have to get our raw materials, and then hiring. So we've had a significant growth from a hiring standpoint. As I mentioned, probably around 750 employees. We've grown over 100 from 2022 to 2023. And we're looking to continue to grow. So we'll talk about that in a minute. think, for us, right now, we don't see any impact from a recession, which I think is great. So I think coming out of the pandemic, there was a lot of pent-up demand for airline travel. So we've seen that growth. And then in addition to that, there's a big drive for spares in our marketplace and that we deal with. So during the pandemic, a lot of the OEMs weren't spending money on spares, and we see that demand also coming out of the pandemic. So it's been really strong.
Great. Well, we always want jet engines to work.
Yeah.
So it's good to hear they're restocking that. Patrick, how about you?
It's been a good run. 2023 was a great year, record year for the company. We had 22% growth year over year. For us, that's significant. Never been done before. I think it was on the hindsight of COVID, to what both of you alluded to. There was some pent-up demand that we were able to capitalize. After that crisis of COVID, I think our market position was really strong. And we came out of the basement right away. We were not necessarily in the field, but leveraged teams and other mediums to stay in front of our customers and continue to prospect. So on the backside of that has been strong. We also made 7 acquisitions between 2019 and 2023. So those have, finally started to scale and integrate. And I think we benefited from that, certainly. And then organic growth. We had over 600 new customers just this last fiscal year. Our fiscal year wraps up in September. So we're 2 months into our new year. But the combination of those 3 things really had a successful year for us.
That's great. Congratulations. It's fantastic to hear. Let's stick with you, Patrick. And as you think about now shifting gears to the future, you work with a pretty wide spectrum of business sizes, small business all the way up to the largest out there. What are you seeing and experiencing from a demand standpoint right now?
Yeah, good question. We do have that luxury of, based on what happens in the world, we're able to shift our focus on who we sell to, who we focus on selling to. So, when corporate money is tight, we can shift to K through 12, higher education, state and local government, so forth. As far as demand goes, there's been a fairly steady decline in print with the work from home transition that we've had to endure. So the new normal for us is about a 20% dip in actual images being produced. But we've been able to mitigate that with getting new customers and new businesses to come on board with us. As far as demand goes, I think that's still up in the air. We don't see, having gone through COVID, supply chain issues, chip shortages, all sorts of challenges externally. I feel like those, knock on wood, have subsided. So we'll see if demand comes back in a big way. Hopefully it does. But again, uncertainty with an election year, with, I'm sure we'll get into some of the economic factors at play, but just a lot of uncertainty out there right now. So we don't really know what to expect. We're just going to do our best to succeed.
Yeah. How about you, Matt?
So as I mentioned, for us, our demand has been flat year over year. What we saw again is, I think we're out of the destocking mode that we saw coming out of COVID. That was had a big implication on our demand. Customers just getting their inventories back in line after they had bulked up so much just out of fear of running out. That was driving a lot of buying behavior through 2020, 2021 into 2022. So that said, based on what we saw with this destocking being through, and when I look at how our orders are coming in and our overall demand, it feels fairly stable right now. It feels like maybe we've hit somewhat of a bottom. Again, I think that the rest of this quarter and into next year will be obviously defining it. That's a kind of a Captain Obvious statement, right? Once we get there, we'll know what it was. But our anticipation, we're going to be relatively flat.
Jim, how about you?
Yeah, I think ours is a little bit different. You look at Boeing and Airbus, and they continue to increase their build rates sort of year over year on their major airframes. When you're talking the 320 family with Airbus or the 737 family with Boeing, which obviously for us then generates more engines to build. So we see strong growth in the commercial side of the marketplace and in aerospace, but we also see continued strong growth on the defense side. So, right or wrong, conflicts around the world are also driving our business from a growth standpoint, where we support a large amount of jet engines and airframe applications. So when we look from 23 to 24, we're going to grow another about 20%. So somewhat similar, year over year, 20% growth coming out of the pandemic. So our challenge is some around supply chain, but we continue to see strong lead times and backlogs. Right now, if a customer comes in and asks for a part, we're probably quoting out over a year, and we have firm backlogs that go out 24 months. So very stable growth and very firm growth for our business.
That's great. We've hit some of the business bingo words already, supply chain. We'll touch another one here as we think about the future. Patrick, you alluded to, there's been so much that business had to deal with over the last really 5 or 6, back to 7 years, actually, with the introduction of tariffs into some of the trade movements between U.S. and China. But one thing that obviously everybody's experienced is inflation. So what inflationary pressures are you each experiencing in the business today? And how has that been impacting your approach to pricing as you go into the market? And Patrick, maybe we'll start with you.
Yeah, certainly in the past 12 to 18 months, we've had price increases from all 3 of our main manufacturers that I mentioned, Canon, Ricoh, and Lexmark. So we've had to transfer that on to the customer, which is never fun, but the pushback has been minimal because I feel like everyone's sort of adjusted to this new normal of, whether it's groceries or I went and got a sub for lunch the other day and just paid attention, and it was like $16 with chips and a drink. It just seems like everything is more expensive. And so customers have seemed to just sort of accept that as the new normal. So the pushback hasn't been too bad, but we've had to, unfortunately, in order to run our business and continue with the margins that we need to operate, we've had to pass that along to our customer base.
Yeah. Jim, how about you?
Yeah, I think they're very similar to Patrick. That for us on the inflation side, the majority of what we see is around raw material. So our input, 50% of our cost is raw material, and that's out of our control. A lot of those agreements are made between the raw material vendors and the OEMs, and then we just pass that along to the OEMs. But we also have long-term agreements where we have fixed pricing for upwards of 10 years. So we've had to go back and work with our customers, open up contracts, and put in inflationary factors from a pricing standpoint. And for the majority, they accept it. They understand the marketplace and what's going on with inflation. But it's still a challenge that we've had to work through.
Matt, how about you?
So, pardon me. So for us, we've got a couple different factors that drive our business. Raw material, like you say, is a big component for us. We recycle, upwards of 75,000 tons a month of old corrugated container, and that's curbside pickup, right, from distribution centers, different, sources. And that's really, the pricing for that material is really dictated by, it's a commodity, right? And it's dictated by the amount of generation, how much you're buying from Amazon, and how much you're getting to your curb, what the recycling rates are. Luckily, the U.S. enjoys really good recycling rates for corrugated containers, so that's good. Export activity, China had stopped taking our recycled fiber from us, but now it's being shifted to Laos, Vietnam, India, different places. So export activity has a lot of an impact there. And even though demand for papers fallen just a bit, OCC availability, one of our main raw materials, has actually gotten a little bit tighter and prices have gone up, partially because there's been some additional paper making capacity in that area. So that's one area for us. Freight had been a big driver for us for cost. Obviously, freight and fuel surcharge, with the diesel prices kind of starting to moderate just a little bit, and they peaked back up just a bit, but also demand for freight has fallen off, so we're seeing reductions in our freight costs. That's a big part of our business as well. We use a lot of chemistry in our process, whether it's in the making a box or in making paper. Cornstarch, everybody, when the Ukrainian situation occurred and commodity prices, egg commodities took off, there's only a couple of places in the country that actually will make cornstarch anymore. And so we were in a very tight spot, and that drove our costs up very dramatically. For us, we're more of a commodity-based product, if you will. We're a differentiated commodity. So a lot of our pricing moves off of indices that are published. And unfortunately, those indices don't always pick up things like starch costs going, or energy. Energy's up 3% for us. In labor, so we look at labor, right? Everybody knows what's going on in the labor markets right now, the type of tension that's out there. We're seeing significant inflationary pressure on labor. The other piece I'd say is for us, we're a heavily capital intensive business. You heard that we've announced a Germantown expansion, our big mill project in Green Bay. There's a big constant redeployment of capital in our business if we want to stay competitive. And CapEx costs, escalation in CapEx has been significant. So some people say 7%. If I really look at our numbers, I would say closer to 10 to 12% of escalation in CapEx. And that really makes you change your approach, which we can talk later. But as far as our ability to pass on to customers, we don't have quite the same model that you guys may have to be able to do that as tightly connected to your price changes as what you'd like to see.
Yeah, still have the competitive dynamic you have to work through.
Right.
Okay. Let's bring some of that together. We talked about demand. We talked about inflation, what you're seeing. Let's combine that with the other things that have popped up. So, you mentioned supply chain, you mentioned the labor, and then interest rates, right? So as you bring this all together, how are you thinking about budgeting for 2024? And what, if anything, have you done differently as a result of these kind of a lot of external factors? So, Jim, let's start with you.
Yeah, for us, I think, with the growth we have, it's trying to balance that out. From a budgeting standpoint, it's relatively conservative, understanding that there is possible risk when we look forward, but still trying to be aggressive to hit our numbers that we need to from a delivery standpoint. So, what we've been trying to do to reduce some of that risk from an inflationary standpoint or a supply chain standpoint is making sure for our raw materials we're going out and looking at additional sources, trying to bring as much as we can in-house, that it's in our control, both from a raw material standpoint, but also from a subcontracting standpoint. And I think the other one you mentioned is around labor, and really thinking about how we, and it may not impact us in 2024, but how we start to partner differently with schools to drive increased knowledge of what we do in our manufacturing facilities, and drive additional career discussions at the middle school and high school levels. Because that's where we're going to get sort of that next generation that we need to continue to supply from a labor standpoint. I think, the other things that we look at is, you talked about CapEx, right? And how we become more efficient in our operations from a productivity standpoint to offset some of the inflationary costs. So always thinking about, how we can do things a little more productive every day. And a model that we just say is, a 1% improvement every day. How can we drive that 1% every single day in our operations, and where we can, and reinvest in the business to drive further either automation or productivity improvements.
So just to piggyback on that question quick. So you mentioned automation. How much more has that come into play in recent years as you've looked at deploying investments in the company versus labor or other challenges on?
Yeah, I would say in the last 5-6 years, we've invested probably about $100 million in our business. And in every case, we're looking at automation. So when we're putting in a new CNC machine, we're looking at, automated tool changers, automated insert changers, where in the past you're running one person, one machine. Now we're looking at automation that you can run 10 machines with 3 people. It really drives up the productivity and really helps to control the cost. But another thing we talk about is the labor availability, right? So if we're looking at automation, there is that impact of, okay, when we drive and look at that, now we need less labor. Well, somewhat the labor is not even there for us to have in the first place. So we're working a lot of different angles when we think about how we look at automation.
Great. Thank you. And now back to the originally scheduled question. Matt, how are you thinking about the business and the budgeting for 2024? Given all the external factors, what are you projecting and what do you see out in the future?
I probably won't get the saying right, but nothing focused the mind's attention like the hangman's noose, right? So sometimes having something that's really challenging out in front of you really makes you get creative and focus on how do we make our business better. A lot of, same things that is shared that Jim mentioned, looking at how do we more efficiently deploy CapEx. When you're in an environment where your cost of capital is lower, you got good availability of labor, you got good availability of supply chain that you need to get your projects executed. I'd be lying if I would say that there isn't inefficiency that builds into the system when you're in that type of environment. So now we just have to keep our teams really laser focused on squeezing the most that we can out of the CapEx dollars that we have. So, CapEx spending may be the same for 2024, But what we get for that CapEx dollar is going to be less, right? We know that. So we have to think about how do we work through that. You mentioned efficiencies. We made huge investments in our organization over the last 5 years, over $1 billion of CapEx into our business. So really focusing on optimizing all that we've already done and really taking advantage of that opportunity through continuous improvement efforts. Employee training if things are slower, that's a great opportunity for us to take our employees and have them spend a little bit more time learning more about the basics of their jobs. We're investing in looking at how do we use AI more in our business. We call it big data. We won't use the AI word because it's a little bit freaky, but using data analytics and big data help make our operations more efficient. That doesn't necessarily speak to the question about the budget, right? But what I'm saying is we're really going to be focused on is really, really milking all that we can out of our operations to be successful with the cards that were dealt in 2024 and beyond.
Great. Thanks, Matt. Patrick, how about you?
Yeah, I think, I mentioned the tremendous growth that we've had, which is awesome. It's put a lot of stress on our organization. I feel like there's a little bit of a work-life balance issue that we're working through right now. So we're optimistic for 2024. I wouldn't say we're bullish. And really, to Jim and Matt's comments too, we're going to kind of just pump the brakes and look at how we can either do the same with less or do more with the same. And we've got a leadership retreat coming up here in early January. We're really going to take a couple days and dive into that and perhaps bring in some consultant assistance as well, and exploring the 80-20 concept as part of that. So looking how we can automate, become more efficient, all the things that these two gentlemen have mentioned as well.
So it was interesting you mentioned the work-life balance. So what are, you're obviously working through this right now, but what are some of the things that come to mind that you can work on that? Is it hiring more people? Is it shifting focus? Or what's the initial thought?
Yeah, I think slowing our rapid growth. When you buy companies at the rate we did, especially during COVID when people were home, I think we made 3 acquisitions in 2020. That's difficult on people. It's a lot to integrate systems, go through, the employee population that you acquired, the properties. It was just a lot for our company to endure, but the opportunities were so good, and we just knew that they were going to pay off long term. Now it's trying to, recalibrate that, make sure people are taking their vacation time, doing some more social outings at the branch level, letting people know that we recognize the hard work that they went through, and we want to reward them for that, and just try to reestablish a really good sound culture.
So almost like getting people back to their day job instead of their day job.
It was a lot of overtime, and when people are working from home, it feels like work never leaves them.
Yep.
There was certainly some resistance. We brought everyone back in June of 2021. It wasn't a very popular decision, but about 2 weeks went by, and I talked to several folks that said, you know what, Patrick, I feel like I have that separation now from work and home, and it's nice. It's not following me everywhere I go. So I think that has helped as well.
Great. So each of you have a pretty unique viewpoint on the macro economy. And I'd be curious as a result to get your views on where you think the economy is going in 2024. A year ago, we were on stage at this time. Everybody expected us to be in a recession throughout 2023. Clearly, that hasn't happened with some of the growth that's happened. But we're kind of back to that same camp. Like, is it going to be a hard landing, soft landing? So, Jim, let's start with you. What is your view on the macro economy in 2024? Specifically, do you expect a recession, and how has your thinking changed over time?
Yeah, and I think that's a very interesting question. I think it's on all of our minds to a degree. It's a difficult one to answer because I think it is a little murky and a little cloudy, right? You mentioned sort of where we've been in 2023, a year ago, thinking, okay, we're going to have a recession, and for the most part, it's been sort of recession-proof. We weathered the storm. I think there are some things out on the horizon that you see. We talk about the election coming up and how's that going to impact everything in next year, some of the conflicts around the world, what happens with a China relationship, and if they do anything different, how does that impact our economy? But I think, from our perspective, we look at it, a little bit of slower growth when you, from a worldwide economy standpoint, a little slower growth in the U.S. from a GDP. So we'd expect it to see, continue to slow down. But I think there is some optimism there when you look back and say, okay, how will we weather sort of that? And I don't know if we would call 2023 a storm by any means, but weathered some of the dark, stormy clouds on the horizon. And can we continue to do that in 2024? I think that there is some optimism that we can, from my perspective.
Great. Patrick, how about you?
Yeah, I'd say, we follow very closely consumer spending because what you do in your personal life tends to translate how you operate when you're at work and how you're spending the organization's money. And we're a reseller, we're a marketing company. So we deal with a lot of purchasing managers, IT managers, CFOs. And if they're tight on spending in their personal life, they tend to be tight with spending at work. With the housing debt at an all-time high, with retailers expecting, slow down consumer activity coming into the holidays, we expect a little of that to translate into the workplace, but we'll see. So we're sort of tentative, and we're just going to be watching those two factors pretty closely.
Matt, how about you?
I think I'll kind of piggyback on Jim and Patrick said. The things that I look at, it's interesting because you get conflicting stories, right? And it's very tough to kind of sift through them. You have Jamie Dimon, that's a little bit more maybe of a bear of what he's looking at in 2023 or 24, and I would argue that he's definitely more in tune to what's going on than I am, for sure, right? So I'll take his perspective pretty well. But the other things that we see, consumer debt is rising at a fast pace, and like you mentioned, it's going to influence how people do their work, but it's also going to influence what people can ultimately buy. Are we at a spot right now where people are kind of doing? There was an article in the Wall Street Journal the other day that talked about I can't remember what the word was, but spending during a bad time. It's like, I'm going to spend my money now because bad times are ahead. Kind of a concept. I don't know how that real is. I don't want to be a pessimist by any stretch of the imagination. But there's definitely some storm clouds out there that I just have a hard time rationalizing in my mind. Again, that's the macro view. So I haven't answered your question about the macro view. I mean, you could argue that we'd be at a relatively low growth rate going to the balance of 2024 as an overall economy. The bigger question I ask myself is, what is Green Bay Packaging going to be doing to be, a unique bubble within that, and how do we compete in there? So that's probably where I spend more of my time. So
Yeah.
less of an answer.
Fair enough. That is your day job, right?
Yeah.
But I guess sticking with that theme of shifting stories and multiple stories, as you think about the economy in 2024, what gives you hope and optimism, and what gives you the greatest concern for where we're headed?
Well, the thing that gives me great hope and optimism is we live in the United States, right? And we've got a great country, and we really do have great people. We can complain about the lack of labor availability. We can talk about generational differences between, Gen X's and boomers and millennials and all this stuff. But at the end of the day, I find that there's a lot of really great people that we have to work with. And we just have to work a little bit harder and coaching them and mentoring them. That's one of the things that we owe to them. And I think as long as we do that, we're going to win, right? It may not be pretty. And the world, you think about what we've experienced in the last, I'm going to take from 2010 until now. We've lived in really good times, right? Low interest rates. A lot of young people in our business haven't seen a tough time, right? So, and these little forest fires that we have to have from time to time, I think are important for our ability to stay competitive, to keep our people engaged, to give them a challenge. Obviously, we like to have other challenges than market downturns or economic downturn, but they're real and they're going to happen. So I'm just optimistic that we live in a great country. I truly hope that we can keep our government from over-regulating us, right? Those are the things that maybe concern me. Too much meddling at that level is concerning and problematic. But again, overall, I'm really optimistic about us as a country and the folks that we have to really take our businesses to the next 10 years.
Inspiring. Thank you. Patrick, how about you?
I'd echo that. I think this is obviously the best country in the world, and we're a resilient bunch, and hopefully it's a great year ahead. I think as I look at our business as far as opportunity goes, it's in the security space. With our managed IT division, we are leaning heavily into cybersecurity. Data breaches are real. There are a lot of bad actors out there. These are happening every single day, and we're helping companies mitigate those, because it's not if you're going to get breached, it's when. And we're helping companies mitigate those instances, when those events, when they happen, unfortunately, but get their business back up and running, get their data back. Ransomware, all those things are opportunities for us to go out and market security. And we've leaned heavily and invested heavily in those solutions, those partners, the training, and those things. So as I look at 2024 from an opportunity standpoint, I think that's definitely one for us on the IT side.
And on the concern side, you mentioned earlier some of the focus on the consumer, and not putting words in your mouth, but speak more about kind of the concerns that are out there.
Yeah, again, that carryover from, everything is more expensive. Debt is at an all-time high. So something has to give there, right? I mean, eventually people are going to spend less and try to get their finances back in order. Whether that leaks into the corporate world remains to be seen. We have a fairly predictable business when it comes to revenue, because of about 80 to 85% of our customers lease equipment. So there's an end to each lease, and we can predict sort of cyclically when those accounts are going to get refreshed and when we're going to gain new business. So that's certainly helpful for us.
Great. Jim, how about you?
Yeah, I think very, very similar. I think, I'll start maybe a little bit with the concern side and finish on the hope optimistic side. But very similar, from our perspective, is there a slowdown from a spend standpoint, for our business specifically, are we going to see a slowdown in passenger revenue miles, less people flying, less people spending money to fly and go on vacations? So that's always out there, I think. But I think from a optimistic hope opportunity side, I think it comes back to the people again, right? I mean, we do live in a great country, and I think locally we have a very hardworking culture. That in Wisconsin, our team, our people see the challenge, they know what the challenge is, and they go attack it, and attack it through hard work and then innovation. I think we've all seen that probably in all of our businesses over this last several years, and the challenges that we've had. And for our business, as we continue to grow, we also see that from the team, and the people that we have go out and attack and figure out how to solve the problems, and then provide that growth for us to continue. So I think there is a lot of opportunity for us as we grow into 2024 and beyond.
I love the focus on people and the culture, and I think it ties in nicely to what we're talking about today with education, and how do we harness that for the future as we look as an economy in the state to make sure we keep those folks, get them educated, bring them into our workforce here in Wisconsin so we continue to grow. So as we wrap up, I want to hear some advice from each of you. So we've talked about all these challenges that all of you have had to navigate and the storms you've weathered at this stage. So as we talk to your peers, other business leaders out there, what piece of advice would you have as we continue to go forward here to manage through all these external factors? Give you guys just a little time here to think about it. Patrick, go ahead.
I can maybe start. I mean, I mentioned earlier when COVID hit, I mean, it was obviously an obstacle none of us had seen before and presented a tremendous challenge. And we, being a marketing company, there's a lot of manufacturers in this room. That's not what we do. We're a reseller. So all we did was put our foot on the gas and try to sell through the problem. And we really dug deep. For those of you out there that are a sales organization and driven by sales forces, I'd implore you to invest heavily in creating a very compelling tool for your sales reps to be out in the field telling your story and presenting your value proposition in a very compelling way. We did that back in 2015, and as a result, when COVID hit, we were equipped to continue to drive revenue and continue to drive business. So from my standpoint, it's investing in the sales side of the business.
Keep investing.
Nothing happens until an order comes through the door, good or bad.
All right, Jim.
Yeah, I think, from my perspective, I think it's about flexibility and change. And we've all seen that, right, over the last several years, is the pace of change is going to continue to increase. So how do we become more flexible? When you talk about supply chain issues, labor issues, inflation, what's happening in the marketplace, I think all those things are going to continue to increase in a pace standpoint. So from a flexibility, how do we react to that quickly and get out in front of it? I think it's very important when you think about everybody's business and how you plan.
Great. Last but not least, Matt.
I guess I would say, look, stay optimistic, be realistic, but stay optimistic. There's a great saying, things are never as good as you think they are, but things are never as bad as you think they are either, right? And, with good teams, with good, solid, strong teams, you can accomplish and overcome just about anything, right? So that's probably the advice that I give my team and that I'd throw out there.
That's great. Well, thank you all for sharing the wisdom, perspective, and insights with us all today. Thank you very much to all of you joining, and that's going to conclude our panel here, and best of luck to all of us in 2024. I wish I had some sort of ability to see into the future, but still working on that. Maybe ChatGPT can help someday, so I don't know. Thank you.
Thank you.
Thanks, Drew.
Thank you.